Welcome back. You're still tuned into Trading Hour and we're in the earnings season, so let's get a corporate conversation going now. TVS Supply Chain Solutions is in focus on the back of their second quarter earnings. Revenue saw 15% decline if you look at it versus last year, while the margin expanded this time around. So to discuss the quarter gone by as well as the outlook going forward, we're joined by Ravi Prakash Bhagavathula, the global CFO of the company, to take some questions on where things could really be headed. Sir, thanks a lot for joining us on the show today. This is Pavithra. I just want to begin by asking you by the weakness that we've seen in the network supply business, because that has seen revenue come down quite significantly. So can you tell us what really is going on over there? Why are you seeing this kind of weakness? And also, is this something that you expect will last for some time, or when can we see the recovery play out?
Pavithra, thanks for having me. Let me start with, we have two segments in our business, the supply chain and the network segment. 55% of our business comes from what we call the integrated supply chain business. That has actually grown handsomely. It's grown 13.8% for this quarter versus prior year. So this is the segment where we provide long-term supply chain outsourcing solutions to companies. And we continue to see strength in that, both on existing deals as well as new deals. I'm kind of pointing this out because when you talk about the outlook, this is what gives us confidence about the coming quarters. Now, coming to the network solutions, the decline is mostly due to the global freight forwarding solutions, where in the past many months, we have seen a decline in the rates that have been incurred, that we've been getting in the global forwarding side. What we see is this has probably bottomed out. And in the coming quarters, what we can see is probably volume improving. Even sequentially, this quarter, volume improved versus the prior quarter. And therefore, going forward in the next couple of quarters, I see a lot more stability and growth in the revenue. And given the better base effects, we should see improved, percentage growths.
Very briefly, Ravi, can you tell us what exactly is the network supply business?
So the network supply business has got two parts to it. One is actually forwarding, where we actually help clients move stuff by air and ocean across global. We have about 8 or 9 lanes across the world where we are strong in and we operate. So that's the forwarding business. And as you're aware, during the COVID period, there was a run-up in the pricing of ocean liner rates, etc., which have now corrected. So that's what has kind of led to this correction in rates. We have another segment to it where we do last mile spare parts logistics for companies. That is another part of it. But the large part is the forwarding solution. I do also Please go ahead.
I'm saying there you've seen some pricing correction, normalization from the peak rates that we had seen post-COVID. You were adding a point. Go ahead.
Now, the second point I want to make is, even though there has been a significant price correction, if you look at our revenue versus cost, our revenue has declined about, say, 15%, but we've been able to bring down our cost by an equal amount, almost 400 crores in both year on year, 2,700 to 2,260, and cost as well. And that speaks to the operational efficiencies that we have been able to drive. So we are kind of talking about the improvement in margins because we've been able to drive variabilization of cost and improve margins. Sure. And therefore, we've been able to drop cost as and when revenue has dropped. The only place where we'll see much better benefit in Q3 is finance cost. We finished our IPO in August. We probably got about a month's benefit of us having paid back some of our debts. We will see the full benefit of that in Q3.
Got it. Just wanted to understand, you all had made an announcement to the exchanges that the United Auto Workers Union labor strike, right, that could potentially impact your subsidiary. What has been the impact of that, the labor strike of the automotive segment?
So in Q2, about 2 weeks worth of revenue was impacted in our North America segment. That strike has actually now been called off as of November 1st. So you'd probably see a small impact in Q3, but now we are back to normal business.
Can you quantify the impact in Q2 and the 1 month impact in Q3?
I think at the top line, we are probably talking about just under maybe In Q2, probably just under about 10 crores. So it's not significant in Q2. Yeah, it's not material in Q2. In Q3, I think we'll have to see when the numbers come out.
Okay, got that. Go ahead.
No, I think, again, what I probably like to point out is 55% of the business, which is integrated supply chain, that's actually growing double digit. It has grown double digit in Q1. It has grown double digit in Q2. And we expect it to continue to grow in a similar vein in the remaining 2 quarters. So that kind of gives us confidence. The second thing that gives us confidence is we have a strong deal flow, and operationally, we've been able to manage our costs extremely well. You can see that we've been able to bring down costs by almost the same amount as revenue. And therefore, that should kind of continue to help us in the remaining quarters.
No, I get that. And, I can see that in the supply chain business, like you mentioned, your margins have also expanded. It's at over 10% now. But can I get, can you help us with some sense of what the overall FY24 growth could look like and what the overall FY24 margins could look like? I know you've said that you're trying to get to a double-digit kind of margin. Right now, I think it's at around 6.2% in Q2. So when do you see that happening, and what can the full year FY24 growth look like, considering that network solutions is a bit weak, but the rest of the businesses, like you said, are doing quite well?
So the way I look at it is the supply chain business, we have good visibility of revenue for Q3 and Q4 as well. And therefore, I actually expect that part of the business to continue to do better. Network, like I said, it has bottomed out. If anything, from now onwards, we probably will start seeing a little bit of improvement due to volume. And that should kind of get to us to FY24, but we should exit with a pretty good run rate on revenue. In terms of margins, the margins that you've seen in Q2 should only improve in Q3 and Q4. And therefore, what the way we are expecting is at an operating level, we'll exit the year with better than what we probably have seen in Q2. At a PBT level, it should be even better because the benefits of having paid back the debt from IPO funds should start kicking in from Q3.
Well explained, Ravi. Thank you very much for joining in, and season's greetings to you and everyone at TVS Supply Chain. Need to slip into a break on that note. On the other side, we'll invite the management of Anupam Rasayan to talk about their Q2 numbers.